Hello everyone, I hope you all fine and doing great. And myself Raja, my take class for CMA Inter Group 2 paper number 10, Cost and Management Accounting and Financial Management. Okay, give me some time and I share this screen for what are the things we completed and what are the upcoming classes, when the classes will be end, like that everything I will share in this video. And we continue the classes of capital budgeting. In the previously, we completed the topic called Financial Management Introduction. I completed cash flow statement. I completed leverage analysis. Completed capital budgeting topic. I completed PBP, means payback period, ARR, accounting rate of return, and the discounting payback period. I complete these three topics in the capital budgeting and complete the capital budget, entire capital budgeting in these classes. Okay. And then in the upcoming classes, financial management, working capital management, I completed in 3 classes. We take then dividend policy, we take 1 classes. Fund flow statement, we take 2 classes, more than enough. Ratio analysis, 2 classes, more than enough. Capital, cost of capital, I take in 2 classes. I completed it. Capitalized structure, 1 classes, we completed it. Management accounting introduction and learning curve, I take 1 classes. Marginal costing, I take 4 classes. It will be most important topic in both cost accounting and cost and management accounting. The both paper number 8 and paper number 10, it will be useful for you in the 3 topics, variance and budgeting and budgetary control. These 3 topics, it will be around 9 classes there. That will be both you used in both classes. It will be benefited for both subjects also. Okay, this is an overview of my upcoming classes and completed classes. You just use it if you want. I complete this entire paper number 10 in 22-23 classes. Today my recording is 3rd April. It will be uploaded in I hope in today itself. And I completed the capital budgeting in today itself, means I completed the balance of 20-23 classes in the May 28th onwards. I completed the entire syllabus. Okay. In this entire syllabus, I covered the most important topics and I clear the every concept in detailed manner. Okay. This is the way I proceed these classes in the starting to ending. This is the completed the way the classes will be goes. I hope you understand what I saying. Sorry for my English, a little bad. For you not understand means sorry. Okay. I hope you understand what I am telling, and then I go continue with the classes. Okay, we see that what today the most important topic of NPV. What is NPV? What are the things I write in here? Okay, let me see. Oh. NPV is net present value. Okay, first of all, you understand that net present value. What is mean by net present value? Net present value is nothing but that net present value of that cash inflows. What is the cash inflow of present value? When it will be invested, that investment on that year, we consider that value, we change it the value. For example, we do in the sum, it will be benefited for you. In the financial accounting, what we studied, I invest rupees 1 lakh. The income of 1 lakh in income of that 1 lakh is 4 lakh. The profit is 3 lakh. We study in the financial accounting. Okay, I invest 1 lakh rupees for this pen. For this pen, I invest 1 lakh rupees to produce the pen. The income of the pen I get is 4 lakh rupees. I get a profit of rupees 1 lakh. 4 lakh minus 1 lakh is 4 lakh minus 1 lakh is 3 lakh. I get a profit of rupees 3 lakh. Like that, in the financial management, we not say that the profit of rupees 3 lakh is not say in the financial management. Why we not say? Because there is one concept is called as a NPV. In the NPV, we see the year of which year we invest the money. There is a two concept. Okay, backward and forward concept. Backward and forward. There is a two concept. In backward, we use discounting factor. We simply say DF. Forward, we calculated in compounding factor. Okay, we simply say CF. Okay, in the year 2015, the value of 4 lakh, we find out the exact value of 1 lakh, sorry, the value of 4 lakh in 2015. What is the value of 2001? We find out it, then only we find the exact profit of rupees in 2001. This is the concept of net present value. Okay, we find for example, we find out that using discounting factor like that, we find out the 2001 value is 2 lakh rupees, income of 2 lakh rupees. Okay, we find out the income of 2 lakh rupees, and the investment is that 1 lakh in 2001 is 1 lakh. Now only we consider that 2 lakh minus 1 lakh NPV. Profit is correct. This profit only correct in the financial management, because the value of a money is keep on changing. For example, another example also I give. In the net present value, we see in the our chocolate also. In the 2001, on my birthday, I give the chocolates to my friends for 1 rupee chocolate only. Okay, in 2001, on my birthday, I give the chocolate to my friends, rupees 1 rupee chocolate called eclairs. On that time, I give the eclairs chocolate, this famous for my childhood days. I give that, on that rupees is 1 rupee, I think so. That chocolate will be I give to my friends. In 2022, now, okay, the same 1 rupee chocolate I give to my friends means they are laughing. What, this 1 rupee chocolate? Where are you living? That value of a money will keep on changing. On that 1 rupee chocolate in 2001 means very big. Now that same 1 rupee chocolate is not the same for 2022. I give another example. In 2001, okay, we forgot the chocolate matter, we leave it. In my grandpa, like that, they live in rupees 100 for, they spend, for example, they go to outing like that for with the friends, they go outing with the friends like that, they spend just rupees 100 for 2 days. They spend 2 days for just 100 rupees is more than enough for them. Okay, and now today 2022, the same 100 rupees, we not put the petrol of our vehicle, it will not come to the 100 rupees. This is the money value is changing year and year and year, due to the two factor I say in the previous classes. Factor number 1 is inflation. Okay, Inflation is the most important factor. It will be change the money value, and interest rate. Interest rate also change the money value. The value of a money changing due to the two factor. First factor is inflation and second is interest. This both factor will change the value of a money. That's the reason we find out the net present value concept. Exactly, we find out the what is the value of a profit on that year. It will be the correct statement for the financial management. Okay. For that backward calculation, we used a discounting factor. Forward calculation, we used compounding factor. This is the basic meaning of net present value. We see in the PPT also. I share the PPT. Okay. I reduce. Okay. Okay. Net present value. Find out the present value of the cash inflow. This is the basic meaning of net present value. Find out the present value of cash inflows. Okay. Formula for net present value was NPV equal to PV of cash inflow CIF minus present value of cash outflow COF. This is the formula. I hope you understand the concept of net present value, and I completed the profitability index concept also. We see the profitability index concept. Okay, this is the concept. Okay. Profitability index. Profitability index equal to present value of cash inflow divided by, the line is missing, sorry for that, present value of cash outflow. Okay, in the net present value, cash inflow minus cash outflow is net present value. In here, cash inflow divided by cash outflow is profitability index. Both concept is same. Do it both in once. We can find out the cash inflow divided with the cash outflow means profitability index. Minus with the cash outflow means net present value. Same, simple concept. In the net present value, we also find out, also known as desirability factor. Okay, PI for 1 rupees, profit of rupees 1, profit of rupees PI for 1 rupee of an investment. How much is my PV of cash inflow? What is the difference between profitability index and profitable net present value? There is only one. What is the total amount of profit if we find out in net present value? What is my return of income per rupee? Rupee, what is my return is we find out in the profitability index. Okay, we come to the basic concept sum. You understand the what is the difference between profitability index and NPV. Okay, this is the sum. ABC is the ABC evaluating an income investment proposal of rupees 3,06,000. which expected cash flows of year 1 lakh. Cash flow after tax is 1 lakh, 1,20,000, 1,50,000 and 1 lakh. Fourth year, the company cost of capital is 10%. Take up to 3 decimals. Compute the net present value and profitability index for the project. What he is saying, a company invests rupees 3,06,000. There is a 4-year they given. Okay, the cost of capital is 10%. It means discounting factor, net present value and profitability index we find out. This is simple, they given as a sum. We find out the both net present value and profitability index in the ones. Okay, I take an Excel. Okay, I write the question in brief. Okay, in the sum, okay, see in the sum, what they given, investment is 3,06,000. Investment is 3,06,000. We simply write, what is the formula? Net present value equal to cash inflow minus net present value equal to cash inflows minus cash outflow. Net present value equal to cash inflow minus cash outflow. Here, cash outflow, here, cash inflows. Net present value. Like this, we write it. 3,06,000 rupees is cash outflow. Cash outflow means investment. I invest it, cash outflow. Now I do not get the money. Okay, get the money only cash inflow. We find out the present value of cash inflow. This is the basic concept. How we find out? We find out the years of discounting factor. They given cost of capital is equal to discounting factor. Okay, we do working note 1. There is a table year 1, 2, 3, 4. I copy paste here. That is discount. This is year. This is cash flow after tax into discounting factor. Discounting factor. What is the discounting factor is 10%. I already find out what is 1 divided by 1.1 equal to 1 divided by 1.1, 0.09. They in the question they take only 3 decimals. It will be given means 3 decimal. It will be given means we take 0.9090. Sorry, 0.909. Okay, like that we do 0.826 0.757, 0.683. We multiple with the cash flow after tax into discounting factor. We find out the cash present value of that cash inflows. Cash inflows. The total is cash inflow. Equal to this multiple this. I simply dragged it for your convenience. Equal to some. The total value is 3 lakh. One 3,70,000, sorry, this 0.751, 3,70,970 is cash inflow. 3,70,970 is cash inflow, minus cash outflow, we get minus 64,970 is a net present value. Okay, in the profitability index, we calculated it. Cash flow, cash outflow divided by cash inflow is equal to 0.249. Sorry, cash inflow divided by cash outflow, 1.21. We say 1.21 is a profitability index. This is the basic sum I do. In the comprehensive sum, they ask in the sum examination like that. What is the comprehensive sum? They ask ARR, payback period, and NPV and PI. The four they ask in the one question. They give the discounting factor and they give the cash flow after tax. Like that they give. You find out the accordingly. This is the simple concept. You understand it. Capital budgeting is very, very easy. Okay, NPV and PI, I completed it. I completed next IRR. What is IRR? We see. Okay. Okay. Internal rate of return. We completed NPV and PI. There is a simple concept is there. We find out the net present value of that cash inflow. Cash inflow minus cash outflow is net present value, and the cash inflow divided by cash outflow is a profitability index. Exact what is the return of income of my 1 rupee is known as net present profitability index. What is the total return I get in the present value is find out in known as net present value. Then internal rate of return is PV of cash inflow equal to PV of cash outflow. It's similar to break even point. Okay, what is the break even point? There is a no loss, no income, no loss. That is the point. No profit, no loss. That is the point. Is known as break even point. Like that, cash inflow equal to cash outflow. That is the basic point, is known as internal rate of return. Why we find out the internal rate of return? Because it will be exactly know which point it will be, there is a no profit and no losses, it will be come in this point. We find out that point for, we find out the we reduce the losses of our business. Okay, there is a one formula, lower rate plus NPV at a lower rate in divided by NPV at lower rate minus NPV at a higher rate, multiple with the higher rate minus lower rate. This is the formula for IRR. You just by heart it, then only you do with the formula. In the cash flow, in the paper number 10, the formulas is most important. That formula you just, some most important formula I tell, that only you by heart it. Before that formula, like cash inflow, cash outflow, like that formula you not by heart it. Some formula you just understand the concept, it will be more than enough. Some formula like this formula is taken as a statistic. In the foundation paper, there is a statistics, in the one paper is there. Like that, in that one concept is there. I not go that concept. That basic concept will be reflected the formula here. Okay, we do the sum. Then only you understand the what is IRR concept. A company proposed to install a machine involving a capital cost of rupees 3,60,000. The life of the machine is 5 years and its salvage value at the end of the life is nil. The machine will be produce the net operation income after depreciation of rupees 68,000 per annum. The company tax rate was 45%. Calculate the internal rate of return of the proposal. The present value factor of for 5 years, they given as a under discounting factor 14%, and 14, 15, 16, 17, 18 they given, and cumulative factor is 3.43, 3.35, like that they given. What we considered the formula, just we apply the formula and do its a sum, is very interesting and a simple concept in IRR. Okay, we do it accordingly. I take Excel. Okay, I write this sum in the given. What is the question they asking is the investment is 3 lakh. They given sorry. This is the last sum. Okay, what they given is given cost of machine is 3,60,000, and then salvage value is not given. Useful life of the machine is 5 years. Given this detail, we find out the depreciation. In the accounting, we see that cost of machine minus salvage value divided by useful life is known as the depreciation. There is no salvage value. That means 3 lakh divided by 5 years equal to 72,000 is a depreciation. Then they given in PBIT, they given in the question itself. You see here that net operation income after depreciation is 68,000. That means PBIT, the 45% is tax, and then higher discounting factor is for 14%. Higher cumulative factor is 3.43%. You not value it like 10% divided by 0.90, like that. We not do that sum. They given the here itself 14%, 3.43, and we considered only two things in the discounting factor and cumulative factor: higher rate and lower rate of percentages. 14% in higher rate, 3.43 in higher rate. then 18% is 14% is a lower rate, 3.43 is a lower rate, and 18% is a higher rate, and 3.13 is a lower rate. Okay, I hope it is correct. Yes. Sorry, 18% is a higher rate. Sorry, 18% is a higher rate and 14% is a lower rate. 3.13 is a higher rate and 3.43 is a lower rate. Sorry for the miscommunication. 18% is a higher rate and 14% is a lower rate. 3.13 is a higher rate and 3.43 is a lower rate. Okay, we do the sum in a fraction of minute. Come to the Excel. Here I mention it only. Okay, we do the sum. First, we calculate the cash flow after tax. PBIT they given 68,000 less interest they not given equal to this minus this. Then tax 45% they given in the sum. %45 of 68,000 equal to this percentage 30,600 minus this 37,400. Depreciation we find out now only 72,000. It will be added. Sorry, I wrongly texted. Yeah, PAT add depreciation. We get the cash flow after tax. We see in the previous classes also 72,000 plus this 1,09,400. We find out the cash flow after tax. Then we come to the cash flow after tax, discounting factor and cumulative factor. Cumulative factor is 3.43 is lower rate, 3.13 is higher rate, cash flow after taxes. Here we find out 1,09,400, 1,09,400. Simply we multiply it cash inflow from that, multiple by here, multiple with this. The net present value of equal to cash inflow minus cash outflow equal to cash inflow minus cash outflow. Here positive value come, here negative value come. In between that there is a 0 point is there. We find out the 0 point using the formula. Lower rate here I show the formula. In Excel I can't clearly mention it. Lower rate plus NPV at lower rate divided by NPV at lower rate minus NPV at higher rate, multiple with higher rate minus lower rate. Here the formula is there. I here apply it. Lower rate of percentage is 0.14. That value of lower rate of NPV is 15,242 and higher rate is minus negative 17,587. Like that, we do that for formula. We consider that IRR equal to 15.85% around it will become. Okay, I completed the three topics. What are the three topics? NPV, present value, net present value, profitability index, and internal rate of return. Internal rate of return means that is a find out the point of zero. Where is that NPV equal to zero? That point we find out in the internal rate of return. In 15.85, NPV equal to zero. We find out it. Okay, that's it. Thank you for the watching the classes. Thank you for Pradeep sir give the opportunity. I hope I completed the entire paper number 10 within within the I given the timetable in the starting classes itself. I hope you all understand the concept of capital budgeting. There is only one topic is pending, modified rate of return. It will be not asking that much of in examination. You just explore this ARR, PB, payback period, and discounted payback period, NPV, internal rate of return, and the profitability index. These 6 formula is most important in the capital budgeting. You just do it, understand the concept, and do it the sum in the workbook and suggested answer in the previous sums. Then you can conclude that how you derive the sum in the examination. Okay, I hope you all understand these concepts very well. Thank you for watching. Thank you. Please comment in the comment box. There is no comments coming. I hope you understand what I am telling. Thank you.